Production then, you're guiding towards the top end of the guidance range. Where is that production coming from? What's new?
We had a very good first half. We forecast a good first half, and I think, you know, when we met last quarter, we came out the blocks for first time for a long time with a solid Q1, and we're really building on that.
Look, you've promised the market 3 big projects over the next 5 years. What else is in the pipeline? When you look into the horizon, what else is out there for you?
Well, as you know, really, the way to make money in the gold industry is to find your own mines and build them. It's been Randgold's model right from the beginning. And we've got one in the pipeline now, which is Massawa, and final feasibility study. We expect to finish it next year, around the middle of next year. But more importantly, we've got some very exciting projects in the Ivory Coast, which we talk about today. In Bondiali, we call it Fonandara. It's a really long 50 kilometers of mineralization. 8 kilometers we've sort of highlighted as very prospective. We've got the first drill holes in. And then Bongogo, which is also in the Ivory Coast. Big bulk target. We've already got 1 million ounces there. So, and our criteria is 3 million ounces and a 20% IRR at $1,000 long-term gold price. And I think if we can deliver those 3 projects, and we're a year into the 5 years,
yep,
well, it's better than any M&A.
And so that's where you prefer to go. The organic growth story, you've said this to us before, Mark, is the story for Randgold. And what was that, $1,000 gold you were counting on there? Where are we now? $1,262 was where we trade on spot gold. What are your, as you look at the rest of the year and into next, and you evaluate Massawa and what you're going to do with all these new prospects, what gold price assumption are you making? 1,000? Does that depend on a lot of factors?
Just 1,000. We've always used 1,000. It keeps you really focused because there's so many variables when you develop a gold mine, particularly in Africa. It gives a chunky margin, and it really ensures that you can manage your business through the cycles.
And I mean, we're talking about the unwinding of balance sheets by various central banks, and if that causes some dislocation in markets and people get nervous, there's prospect for it to go higher, though, I suppose, on that kind of financial dislocation.
Yes, I think what I've said for a while now, you know, in the medium term to long term, the supply of gold is really going to tighten because we as gold miners haven't really spent money on replacing the gold that we mine. And that's why we believe we're well positioned in the market to continue to create value for our various stakeholders.
Look, I don't know what you do every quarter when you leave here. I don't know whether Anna and I encourage you to go and grab a hold of the head of mines, but you've managed to take costs down again. You're at $572 a quarter for this quarter, $595 for the half year. So we're down 8% and 13% respectively. The natural question is this as good as it gets in cost reduction? Pretty much, yeah. Unless fuel goes down further. You know, it's a big driver in our costs. It's all about efficiencies. You know, we've been growing our mines. So, as you grow, as you pointed out, as you grow production, got a fixed sort of base cost. And so, if you increase production, you bring the cost down. And you know, it is. I mean, Loulo-Gounkoto has done very well. It's grade-driven, and our mines are all higher grade than most mines in the world.
What about returning cash to shareholders then? We talk about this periodically as well, don't we, Mark? The amount of cash you're carrying and the prospects around dividends.
So we've got $572 million in the bank, no debt. We paid a $94 million dividend this last quarter for 2016. We also paid $60 million of tax, cash tax. So we're generating you know, significant cash flow, which you would expect because we're profitable. And we've always said we want to have $500 million of cash to be able to support our growth programs, and the rest we'll pay out to dividends.
Don't you want a bit of debt, given how low interest rates are at the moment?
You don't. Having debt in a gold company is not a good thing because you really want your shareholders to be fully exposed to the gold price. You want the upside. Just a quick one on regulation and good practice and tax. Death and taxation and regulation. Mali, you're close to resolving your tax dispute. So just how close are you? Well, it's
Is that an
we've
announcement
got
we can expect in the next
procedures to
quarter?
deal with disagreements in our investment convention, and we haven't exercised those legal processes yet because we're engaged with the discussion with the ministry and the tax administration.